Engineers India, Navratna PSU is in focus after the recent announcement of signing an MoU with Nuclear Power Corp for small modular reactors. Before we go to the management to understand the strategy here, let me go across to my colleague Puneet, who's setting up that conversation for us.
Well, thank you for that. So definitely key order wins in the recent past. It's also had a decent quarter-one performance where, margins have largely sustained on a standalone basis as well. The key aspect of this conversation is, of course, what they're looking at going forward, because in this quarter, order inflows were slightly slower compared to the same time last year. But the overall, order book is over 12,000 crores. That's 3 times the company's current revenue. So execution timeline will be one of the key aspects. Apart from that, the company has reaffirmed its guidance of roughly 15 to 20% growth for FY26. How does that shape up with order book as well as with margin profile? That will be one of the key aspects, as well as the potential for upward revision is something to talk about. Finally, in terms of longer term revenue, the company has guided for 5,000 crores of revenue by FY28. So those will be some of the key aspects to look out from this conversation of Engineers India.
Okay. In fact, let me take that question first to Vartika Shukla, who's Chairman and Managing Director of Engineers India. Ma'am, thank you so much for joining us on the show today. And in fact, let me begin by asking you more about this MoU with Nuclear Power Corp for small modular reactors. What's the plan here? What's the strategy here? And what is the kind of synergy that you see?
Thanks, Tamanna, for having me on the show. EIL, as you know, a Navratna public sector organization, an engineering company embedded in which is the strength of the technical capabilities for end-to-end services to our customers, both in the domestic sector as well as globally. This particular MoU, when we talk of, is the realization of one of our strategies for growth and sectoral diversification. We are not new to the nuclear sector. In fact, we have done the balance of plant for Kudankulam trains some years ago. And we've also been very closely associated with the nuclear fuel complex at Kota, as well as IG CAR, and a lot of other work that we are doing in that sector in terms of engineering studies. This MoU, which we have inked with NPCIL, NPCIL has taken us on board for supporting them in the meeting of the nuclear mission of 2047 in terms of the conversion of the landscape of the grid to a green landscape wherein we have a lot of nuclear power, in which these small modular reactors play a very significant role both in the public sector and the private sector space. So we look forward to having a lot more association in this sector to leverage our core competency, which already exists. And I think the time is very right. The push towards even the reforms which are due in this sector is very likely to happen in very soon. And as a company, we are very well positioned to take the center stage in terms of offering our engineering capabilities, our project management capabilities to bring up and strengthen as well as expand the sector.
Let me just come for a second to your numbers this quarter, which overall look good, a bit of a miss on revenues, ma'am. Do you see that as the result of a sort of a lumpy kind of a model? How would you recap quarter one, even though now we're done with that result season, and what is quarter two looking like thus far?
So I wouldn't term it as lumpy. It's very clear, very crystal clear. In fact, if you see the results and you see the trends, year-on-year basis in terms of the quarter. Businesses are different. A business segment that we are in terms of consultancy is very different to an asset-oriented organization or any other e-commerce or any other, which is having its own nuances per se. So for a consultancy organization like ours, typically our last quarter is the best quarter in terms of both the top line, bottom line, and many other financial parameters as well. So if you see on year basis, I think the first quarter is brilliant. It's not just okay. We have an upward of, the top line and the turnover up to about 40% up on year basis, as well as our PBT and PAT are also up to by about 27-28%, which shows that we have now, as Puneet was mentioning, we have realized the order book into actual execution of projects. And since our order book is extremely robust and the highest ever in the history of the organization and growing steadily, we see growth in all the quarters thereafter. And we do want to achieve the 5,000 crore turnover by 2028, definitely. Margins we have held, but in absolute terms, our profits are higher by 27%. And we hope to keep building on this trajectory moving forward, because the robustness is in the strategy that has actually been executed in the organization at various levels, internally as well as externally.
Ms. Shukla, Neeraj here, and good talking to you again. Is the order book position the principal linchpin on which you have the confidence of trying to or talking about how you would reach those numbers, or is there something else? It could be future order inflows, it could be the way the sector is shaping up and your ability to bag new orders. What is it?
So I would say it's in three parts. One is, of course, the order inflow, which is there, which is a continual process. And that rests also on the strategies we deploy to continue to work towards getting more and more orders. Let me tell you, in businesses like ours, the order inflow is a result of significant, investment in building that pipeline of inflow over the last few years. They don't materialize just overnight. So that is a process which is well in shape. So one is the robust order book that we have. The second is the plans and the actionable KRAs which are there in the organization for each and every vertical that we have, such that this order book is going to continuously grow with all our efforts. And the third leg is the execution, wherein our operational excellence and the strength that inherently exists, which has been full of more digitalization, more quality aspects, more focused approach in terms of internationalization as well, is likely to realize in our financial results. So financial results are an outcome of a lot of factors, and I think most of them have been blended in a very seamless manner. So we are very, very confident that on all these fronts, on all the three fronts, and that confidence is actually going to speak up in numbers in the coming quarters as well.
Yeah, I mean, your PAT margins improved quite significantly. I'm presuming that will continue. But I had a specific question, Ms. Shukla, on this whole internationalization of your business. And I'm presuming that the Saudi piece has worked thus far well for you. If I'm not wrong, 2,000 odd crores of the order backlog is from Middle East and Saudi in particular. And please correct me if I'm wrong. Do you expect that to strengthen in the next few quarters?
So I'll just put a small correction there. We have still not opened our book with Saudi, and our order inflow.
Abu Dhabi, sorry.
Yeah, Abu Dhabi. So we have a lot of business from the Emirates and Qatar, as well as Bahrain, as well as Kuwait. So these countries we've opened up. We are opening. We have already opened an office in Saudi, and we hope that the layer that we've built in Emirates will be topped up by a lot more business which will come from Saudi.
Yeah.
So
therefore, ma'am, allow me to rephrase my question. Allow me to rephrase my question. Therefore, Middle East as a geography, because it has a reasonable presence in your order book, does that improve over the course of the next few quarters?
Yes, it does, because if you see Middle East per se, there are a lot of investments happening in sectors wherein looking at expansion in terms of gas producing capacities, in terms of oil producing capacities, in terms of refurbishing their offshore assets, onshore assets, as well as looking at newer, greener or sunshine areas like decarbonization, which is again very kin to the oil and gas sector per se. So there is a lot of investments which are happening, a lot of projects which are ongoing. And we do see that, and since we are present in all of these sectors, we do see that we will have ample opportunity to offer our services, engineering services in the Middle East region.
Well noted. Well noted. Okay. The final piece would be, okay, maybe I assumed, but I would love to hear it from you. Would you believe that this uptick in growth would be accompanied by uptick in profitability or uptick in the operational metrics at the EBITDA level as well as the PAT level? I mean, one thing is to grow and grow with consistent margins or maybe slightly lower margins, because it's good to have that order inflow and the revenues. But two is to maybe do it with even more higher or even higher profitability. Could that be possible?
It is possible. It is how we strategize our operations, how we look at our businesses. See, today the world is very competitive. Whether you look at domestic businesses or you look at international businesses, both the business segments, both the geographies are very competitive in terms of our presence. And therefore, margins definitely are always at strain. But our differentiation factor, the factor in which we work in some of the sectors wherein we bring in a lot of value on the table. And there we do have a position of strength where we can actually steer margins. The other part is that our deliveries are very good. Some of our deliveries are excellent. They are completed on time and at the best quality within the cost. And that is what the customer wants. So there is a preferential price point, if I would say, to services that we offer in that segment as well. So we have a blend. We need to also keep our order book good. So we also have to compete. But on the inflow that we have, we do see a very strong possibility that our margins are likely to be on the upward, not very aggressively, but definitely not downward.
Okay. Ms. Shukla, we will leave it at that. All the best for that and more. Thank you so much for taking the time out.
Thank you so much, Neeraj. Thank you.